Good afternoon. Good afternoon. It's Monday, the 7th of July. Welcome to another edition of Monday Market Picks. My name is Thilan Wickramasinghe, the head of research for Maybank Securities here in Singapore. Happy 7/7, by the way. Hope you've got some good deals going on. Deals is what we are waiting for as well from the Trump administration. So far, we've had a couple of deals from the UK, from China, as well as Vietnam. How about the rest? Letters are supposed to go out at 12 p.m. US today, but there's no way of knowing what's going to happen, and markets are trading cautiously. But there are some bright spots, particularly in ASEAN, where there is improved policy certainty and a weakening US dollar, creating renewed interest in the region. So we will focus on that today, and as well as some conviction ideas. So in today's show, we will speak with regional strategist Anand Padmakanthan on how he is seeing the region and where the opportunities are. We speak with Jarek Seat on a conviction opportunity plus stock where there's about 40% upside. We also focus on Singapore and Malaysia banks. You can't escape them. They're the biggest sectors in these two countries, and what the latest loan growth numbers tell us. Plus, we've got some new trading ideas from our chart guy as well. But let's start with Jarek. Jarek, you highlight ISOTeam, which is a real estate and maintenance upgrading player, as an opportunity plus stock. Since your initiation, the stock's up about 20% or so. What do you think is going to take this stock higher?
Hi, Thilan. Yes. So I think the key upcoming catalyst would be firstly the results, the second half earnings, basically their June year end. So they should report their full year of the 2025 numbers upcoming in August. So I think if the numbers do hit my estimates, you are looking at a close to 230% EPS growth year to year, due to the margin recovery story and also decent revenue growth and better margins. So basically, I think results will be the key catalyst. Next would be more contract wins. I think if you look at contract wins, they just announced last week that they won 21 million worth of contracts. And we do think that, contract wins are likely going to speed up going forward. And we expect them to win another 15 to 20 million worth of orders in the next 1 or 2 months. So basically, we do think that these two catalysts would be key in terms of financials to bring the stock up in terms of its share price.
Okay, so some couple of things to watch out for. But also, one of the exciting parts about this stock is their drone painting, which is supposed to be a game changer, particularly in labor scarce Singapore. Can you give us a little bit more detail on how this project is coming along, and how far is it really from commercial usage?
Sure. So I think now they are waiting for some clearance with NEA and some other government agencies as well. So once those clearance are granted, we are expecting. I mean, there's been a bit of delay, but I think due to this clearance from the different government agencies for public safety. So once this is cleared, we do think that they should be able to start testing it on a VTO site, on a HDB VTO site by September this year. And then that's why it's successful. We think that the full rollout could happen by the end of this year. So likely, I think this key catalyst could be, I mean, the September one will be the first point of reference where, if it's successful, then basically by the end of this year, they should be able to roll out to most of their projects by December or January, around this period. Yeah.
Okay, and then Jarek, just finally, you mentioned the second half results that are coming out, and you're expecting it to hit your numbers. Are there any key highlights that investors should be watching out for?
Yes, I think we should look at the margins. So if margins do recover and on the gross and also the net level, then I think we can continue to see margins recovery also in FY26 to pre-COVID, to more of pre-COVID level margins. And I think that net margins will likely also continue to improve because of the better operating leverage. And then the next thing to look at would be the order book. I think by right they should have higher order book, and as more project swings in the next 1 2 months and at a faster pace, because with so many initiatives by the government on the HDB side as well on upgrading and so on, we do think that there is likely going to be much more contracts to be won in the next 1 to 2 years. So order book and also margins would be key, yeah, to what investors should look at. And going forward, we do think that the next 1 2 years, or actually the next 2 3 years, should actually be very good for them in terms of earnings growth. And we do expect, if they were to hit our numbers this year, next year, even FY26, we are expecting a 30 to 36% year-on-year growth, which is quite a feat for companies, and we do think that for ISOTeam is actually highly possible.
Got it. Thanks, Derek.
Thank you.
Now let's turn our attention to the broader ASEAN region, and Anand Padmakanthan, our regional strategist, joins us. Now, Anand, welcome to the show. Now, Vietnam is one of the best performing markets in the region. Singapore's STI is hitting record highs. There is reform momentum in Indonesia. So my first question is ASEAN back?
Yeah, morning, Thilan. Yeah, interesting question. Well, we would all hope that ASEAN is back. I mean, obviously, we still have some barriers. Most obviously, the tariffs. I mean, you mentioned that Vietnam has signed a deal, but the other five ASEAN countries haven't signed anything as yet. So there's still some overhangs from that. And also, I think we should expect some slowdown in the macro momentum in the second half for ASEAN on the exports front, at least, because we're seeing a lot of front loading happening, especially in the second quarter. So that, well, it's sort of borrowing growth from the second half. But, those are two headwinds, but there are a lot of tailwinds. Yeah. So when you say ASEAN is back, potentially so, probably more than 50% chance that ASEAN will outperform in the second half. You mentioned one reason already, diversification away from the US dollar. That's ongoing. So in terms of portfolio flows into equities, into ASEAN fixed income instruments, we think that will continue, and that will be supportive of domestic markets, asset markets, as well as currencies. So that's positive. Also, we should have tariff resolutions very soon. Hopefully those letters are not actual letters and they're actually emails which get out very quickly. And we sort things out on the tariff front over the next couple of weeks decisively, and then we can move forward from there. That will lift a big overhang for ASEAN markets. But those are external factors. I want to stress that domestic factors look quite good for ASEAN. For one thing, inflation everywhere across ASEAN is falling to multi-year lows. So that's really opening the door to interest rate cuts. And we see practically lower rates from every ASEAN country in the second half. In Singapore as well, it's already happening. And that's going to be very stimulative. Fiscal spending is going to pick up as well. There's a lot of infrastructure projects across ASEAN happening. So fiscal policy is going to be quite expansionary, and that's going to help cushion the growth trajectory of the region. And third, but perhaps most importantly from a structural perspective, is domestic reforms. I think the issue with the US and tariffs and the inability to rely on trade anymore as the major source of growth is really focusing minds on domestic reforms. So we're seeing domestic reforms happening across the region, more focus on cutting red tape, fighting corruption, Vietnam, empowering the private sector. So I think all those things will also be quite good for longer term growth for ASEAN as well, and markets should reflect that.
Got it. Now, I want to focus a little bit more on Vietnam. Now, they're the only ASEAN country with a trade deal with the US. Most of the countries are still awaiting theirs. There's a question as well in terms of trying to clarify what is actually happening with these tariffs and whether August 1 is now the new date. But I think Trump just came out to say that by 12 p.m. US time that they will be sending out some letters. But I think there will be some opportunity from what the Treasury Secretary says that even once these countries get these letters, they will have the opportunity to negotiate all the way till the 1st of August, which means they might get another moratorium. But not very clear, but it seems like that seems to be what the working theory right now. But Anand, with Vietnam, there are some domestic factors in play as well. So how do you view this market, which has been the best performing market so far in Southeast Asia, and what are some of the stocks that you like?
Yeah, I think cutting that trade deal with the US is a big positive for Vietnam. It lifts a lot of uncertainties, and you're going from 46%, which is what was threatened on Vietnam, down all the way to 20%. So that means the differential with key competitors like China, which is at 30%, remains quite wide. And they should continue to reap the benefits of that differential, continued FDIs, continued supply chain relocations into the country. So when I talk to my Vietnamese counterparts, they're very happy with this deal. It removes a lot of uncertainty, the rate, they can live with it. And in terms of corporate earnings, they think, the impact on corporate earnings is quite modest. Pre-tariffs, they were looking at about 18% year on year this year. Now with this deal, they're looking at 15%, which is still the best earnings growth you're going to get in ASEAN. Yeah. So that's that's a tariff issue. But you're right, domestic reforms and domestic issues are perhaps as important. One big one is the domestic reforms aimed at empowering the private sector. Our head of research in Vietnam says the government is extremely committed to making the private sector the next engine of growth going forward for the country. Move away from trade, have it be driven domestically by domestic entrepreneurs. So you're going to see a lot of policies coming through in making business easier in Vietnam, cutting red tape, reducing taxes, improving on regulatory parameters as well to empower the private sector. And that potentially could be an even stronger source of growth for Vietnam than trade going forward. And the other thing that we're looking forward to is a market upgrade. In all this tariff stuff, people have forgotten about the fact that the Vietnamese market is still a frontier market. And we are expecting it to be upgraded to developing market status by FTSE in September. So that's going to be an added boost to capital markets there as well. I think stock picks, yeah, frankly, we like pretty much everything in Vietnam. But to give you some priorities, we like banks, Techcom Bank, Sacom Bank, Military Commercial Bank. We like Consumer Place, DigiWorld, Mobile World, P&J, property, Nam Long, Nova Land, and infrastructure as well. I think one pretty good play is Airport Corporations of Vietnam, nice play on tourism and infrastructure growth in Vietnam.
Got it. Yeah, you can find all those names and a lot more details in our newsletter today. Now, Anand, zooming in on Singapore, how are you thinking about this market from a regional perspective? I mean, STI is hitting record highs. Any stocks to watch from a regional lens?
Yeah, Singapore has done great. I mean, we've been overweight Singapore since the start of the year, along with Malaysia as well, which hasn't done that great, to be honest. And Singapore, you say Vietnam is the best performing country year to date. And that's on a nominal basis, absolute local currency basis. But in US dollar terms, Singapore beats everyone, leaves everyone in the dust. It's up 14% year to date. And I think that really underscores the safe haven appeal of Singapore dollar assets. And as you've mentioned in your research, Thilan, numerous times, a lot of things are going right for Singapore. The AI thematic, probably in terms of deployment, the Singapore corporates are way ahead of anyone else in ASEAN. It's a very strong capital management team, which has raised dividend yields to 5-6% for many stocks. And you have the MAS scheme as well to improve market liquidity. That's going to be a big driver, especially for the small mid-cap space, I think. So a lot of things are going right. I think if you want Singaporean stocks with a sort of a regional flavor, some of the stocks in your top pick list like Sea Limited, e-commerce, their Shopee platform still has a solid above 50% market share of ASEAN e-commerce. Singtel, that could be a good play on data centers as well, especially with the Johor Singapore Special Economic Zone, sort of encouraging that thematic. Sembcorp for clean energy in the region. And smaller caps like CSE Global, the system solutions provider, which has businesses across multiple sectors and across the world as well.
Okay, and then let's go to Indonesia, which is also starting to show some reforms as well. So is this the turning point for this market, and any stocks there that you like?
Yeah, maybe a little early to get too excited about the reforms. I mean, the market has done well, don't get me wrong, but I think the rebound in the Jakarta Composite Index is more to do with macro stability returning, with the weaker US dollar being a key component of that. So rupiah stability has allowed for greater focus on Indonesian assets, reduce the risk premium. But reforms could be a second leg for the market going forward. I think the most recent reforms were easing of import rules on almost 500 products. So the government is moving towards making it easier for people to do business with Indonesia, basically. But there are a lot of unknowns still, Thilan, which makes me a bit more neutral in the market for now, especially after the run. One is we don't really know how the Danantara-led SOE restructuring is going to pan out. That's huge. Indonesian SOEs are massive. And the restructuring of their sort of dividend flows into Danantara and what Danantara, the sovereign wealth fund, is going to do with them remains a bit of a question mark. And some other policies, like the free school lunches, a rollout of rural cooperatives to sort of empower rural economic growth and value creation. All those things are works in progress. So yeah, something to keep an eye on, reforms in Indonesia. But for now, we're very selective. We like stocks with a secular thematic. I'll give you three. One is BRIS, which is a Sharia bank in Indonesia. It has a 70% market share of Islamic finance in Indonesia, and the country itself is becoming more conservative. So there's a very powerful tailwind for that stock in terms of multi-year growth. There's Medco in upstream oil and gas. Indonesia is focusing a lot on energy security. So there are a lot more blocks and exploration going on. So Medco is your play on that. And INTP or Indo Cement. There's a lot of infrastructure happening in Indonesia. But two areas which are seeing greater momentum. One is housing, as interest rates have come off. So that's taking up a lot of cement supply. But the other one you want to keep your eye on is this massive project called the Jakarta Giant Seawall Project. So they're going to build this huge seawall, in fact, across much of Jakarta as well as Java, to help with rising sea levels. And that's going to require a heck of a lot of cement here.
Okay. And then before I let you go, just to touch on Thailand. I mean, it's bad news after bad news now with the Constitutional Court ruling on the Prime Minister as well. Should we just give up?
Well, I wouldn't say give up. We should keep an eye on it, but I wouldn't get too excited about it right now. I think the only positive we can take away from developments at the moment is we don't expect house dissolution in Thailand. So we don't expect another election to happen. Yeah, so we expect the issues with the PM to be dealt with within the coalition, perhaps a new PM being named sometime down the road, and life goes on. But it doesn't take away from the fact that Thailand, we're still seeing a struggling macro picture. GDP is up 3%. Tourism is underperforming still. So very defensive. Our head of research there only likes two sectors with conviction. One is energy, and the other is telcos, which is super defensive.
Got it. With that, thanks, Anand, for joining us. You can see a lot more details on this in our newsletter today, so do download that report. That was Anand, our regional strategist. Now, for the largest sector in both Singapore and Malaysia, May loan growth numbers are out. Malaysia showed some modest acceleration with industry loans growing at about 5.3%, driven by upticks in construction and working capital loans. Singapore's was a little bit more tepid, rising 3.5%, which is a slight nudge up from April's 3.4%. Household lending is cooling in both countries. Malaysia's mortgage and auto loans are slowing, while Singapore's residential consumer loans are stable, but not stellar either. Business loan demand in Singapore surprised on the upside, thanks to some front-loading activities because of all these US tariff policy deadlines, especially in manufacturing and logistics. Now, Singapore's non-residential loans dipped into contraction with deeper declines in manufacturing, reflecting the geopolitical drag. Deposit growth is diverging. Malaysia saw slowest CASA growth, while Singapore's deposit grew faster given its safe haven status. So that's going to keep interest rates low domestically. So overall, we're neutral on both the Singapore and Malaysia banking sector. No sector-wide breakouts, but also no sharp deterioration either. So selective stock picking is key for this sector. In terms of our preferred picks, in Singapore, we only have one. We only like DBS. And in Malaysia, we like Public Bank, AMMB, Hong Leong Bank, as well as Hong Leong Finance. With that, let's just go to what our chart guy likes. He's got two trading ideas. One is accumulate on Nam Cheong Limited. Previous downtrend has shown signs of a bullish shift as the price recently broke above its downtrend channel. So do have a look at that chart, and he's calling for a trading buy or accumulate on this stock. And he has a distribute or trading sell on Yangzijiang Shipbuilding. The RSI is forming a lower high structure, pointing to more selling pressure. So do watch out for that. With that, let's have a look at events that are coming up. There's one event that's happening tonight, actually, at 8 p.m. Singapore time, where we have the heads of research from Singapore, which is me, along with Malaysia and Vietnam, talking about the outlook for the second half of this year. So do join us by scanning this QR code. And also on the 23rd of July, we have the second half outlook for Singapore, a much more comprehensive one, which is at the SGX Center, which is a live event. We will have Hagbin, macroeconomist, as well, along with a few corporates, where we have corporates with their senior management teams will be there for especially for some of our high conviction stocks as well. So do join that event as well. With that, we are out of time. Thank you so much for joining us this week. We'll see you next week. Have a profitable trading week.